welcome to episode 69 of the AMT podcast. Hope you've all been well. I know it's been a couple of months since the last episode, so you'll have to forgive me. There's been no excuse really. I've only been trading the IPL for the most part, and I've been happy to sack off the rest of the day in the meantime and play golf with the weather, which has been so good so far. But I still post weekly newsletters and my positions in my Discord channel to members daily. But since I'm on the move and I don't have my camera equipment with me, the podcast has fallen by the wayside. But I will at least post audio clips going forward. I found a bit of downtime today with the IPL being postponed indefinitely, and the PSL is in the process of moving to Dubai. So it's all a bit crazy at the minute. Unfortunately, with the geopolitical situation between India and Pakistan, it's spilled over into sports. I had a nice green book on the match odds and completed match market on yesterday's Punjab game, only for a supposed electric failure causing a light outage. So both markets were in fact voided, and it only came to my attention after the game that the situation in nearby parts had deteriorated. So it was likely a security issue. I wasn't watching the Pakistan Super League, but the game there was also called off. Apparently a drone attack had struck the Rawalpindi Stadium, and the completed match market was also live on that game. I personally didn't trade it, as I said, but it feels almost like a morally grey area betting on whether a game is going to go ahead or not when people's lives are at risk. It kind of reminds me of that episode from that show Billions, for those who've seen it, where Axelrod's hedge fund is shorting stock live on a company whose CEO is boarding a rocket to space. So they're in effect betting on a failed launch, which it was, and the CEO died as he was aboard on the rocket, and everyone in the office was celebrating. So just because something's available or legal to do so, it doesn't necessarily make it ethical. And this whole geopolitical situation, I guess, serves as a reminder that more important things in the world are happening right now. So let's all just pray for de-escalation. Anyway, as things stand, we're well past the halfway mark in IPL. 55 games in at the time of recording this, to be precise, and I've been ticking over rather nicely. 57 games, actually, I think, round about that. But I've traded 50 of those 57 games. 41 out of the 50 games I've traded profitably, almost 10 points up. And that's across the match odds, run lines, and the CMM markets. Now, typically I've been staking around 1 unit per game across 2 to 3 positions. So around 40 points, just over 40 points staked in total for around about 25% ROI. So I'm quite happy with how things have ticked over so far. It's never straightforward advising trades to a group. And as a rule of thumb, I typically recommend people divide their bank into 100 units. Granted, I'm operating at a bigger scale than most, so I guess people are inclined to probably bet more aggressively with a smaller bank. I don't recommend it, since the goal ultimately is to track ROI, and the process of compounding takes care of itself with time as your bank gets bigger. But personally, I rarely bet more than a full unit on 2020. I bet far bigger on Test cricket, golf, and boxing, but I bet smaller on racing, where liquidity is far lower, but there's a far higher volume of markets. So staking ultimately boils down to liquidity, volatility, strength of your edge, your bankroll size, and ultimately what you're comfortable with. And it does take trial and error and experience. When it comes to edges, it's no longer worth it for me to aggressively sift through data or test new strategies just for an extra 5% ROI. Some people are passionate about that. I'm just not. Strategically, I'm playing a more maintenance or defense game. I'm more interested in operating at scale. Past a certain skill level or hit rate, digging deeper into data or over-analyzing the past potentially hurts your results, because the past only serves as an indicator and you run the risk of overfitting. You see, the art of in-play trading lies in being able to couple what's happened with what's happening now, and then make a decision, unless you're automating. So most people are better off operating at scale, which anyone can do. But in order to do that, you have to learn proper financial habits and learn to handle winning and losing runs, and letting the bankroll compound by itself. And when you can do that, earning 10 to 15 points on franchise cricket for a couple months' work can be very substantial. And so far, my results have been testament to that. We made 13 points off the Big Bash in January, and we're 10 points up as of now in the IPL. So if you're in my group and you followed, say, 80% of my trades, you'd be over 18 points up now just from clicking a mouse and collecting internet money, essentially. So that's 180 quid off a 1K bank. So your year's membership paid for, or 1.8K off a 10K bank, or 18K off a 100K bank. And yes, there is one member I'm aware of who's operating near that level. But anyway, in regards to the IPL, ordinarily I'd be at the stage where I'd be scaling up by now, but it just feels like teams are a lot more chaotic and less true to form than, say, the Big Bash, which is quite ironic since the churn in the squads in the Big Bash are a lot higher than the IPL, yet there's a bigger penchant for chaos in the IPL. And the outright market's been testament to that. The Sunrisers Hyderabad were touted as one of the best, most balanced teams, on paper anyway, and they've been amongst the worst performing. They've been exposed as one-trick ponies. They've been the worst performing bowling unit, and they're second favourites to finish at the bottom of the league, behind Chennai Super Kings, who were the third favourites going in. And again, a seasoned winning team with a strong home record, and they've proven to be absolutely hopeless, incapable of chasing anything. Then there's the likes of Punjab, historically the most chaotic team, who haven't made the playoffs and were the rank outsiders at 13-1 and are now third in the table, having halved in price. And I backed them from the start and advised members to do so. So we're sitting very nicely over there on the outright market. And then you've got the likes of RCB and Gujarat, the other outsiders, who've also halved in price, less than halved in price. The great thing about franchise cricket is that prices are nowhere near as sharp as football, where a league has 20 teams playing 380 matches across 9 months. The data's so deep, there's nowhere near as much churn in the team, so you can reasonably expect the top 4 to be somewhat predictable every season. Whereas in franchise cricket, it's only 1 to 2 months long. There's lots of squad churn, and of course the pitch is a very living thing in cricket, unlike football. It evolves and changes throughout the course of a tournament. So there's plenty of volatility to take advantage of. There's so many changing variables. And in the outright market, in the case of Punjab Super Kings, the market totally ignored the quality of the new signings whilst overrating the likes of Chennai, relying on previous form. And it was the same case in the Big Bash where Hobart, where despite having a solid squad on paper, were the rank outsiders due to their historic performance, and they ended up winning. But even if you don't trade mainstream franchise cricket on all the big international games, the beauty and uniqueness of cricket is that even the low-quality, untelevised, obscure games still have more liquidity than your average Premier League game. There is so much money piling into the markets from South Asia. You can literally bet on a women's Pakistan versus Thailand match in the middle of Timbuktu and still have liquidity that rivals a Champions League game. Except the prices are far less shrewd. Compromising on the quality of the event in, say, horse racing by betting on Irish racing, or taking another notch down, American or South African racing, or third-tier football or satellite tour tennis, means you'll have to dabble in markets far less liquid and leave yourself exposed, where you can't exit at the desired price or just scale back entirely. In cricket, that's not the case, because even low-quality games or leagues that nobody, at least in these aisles, are watching, still have millions matched. And a lot of these games are difficult to price up due to scarce data on unknown players and teams. So value is everywhere to be found. Now, I'm not here to sell anyone on what you should or shouldn't trade. I know a lot of people doing very well on football and racing. It all depends on preference, talent, and risk tolerance. But for me, cricket has that perfect balance between liquidity, volatility, and most importantly, soft prices, which all seem to be missing, in my opinion, in racing, where liquidity continues to tumble year on year. I was looking at Ascot today, and it's one of the better tracks on the calendar, and barely 65 grand was matched 10 minutes before the off. It's absolutely dying. You just can't maintain your ROI without taking massive risks and leaving yourself exposed, which is just not how I like to trade, because my edge relies on cutting positions as quickly as possible. I'm somewhat of a ladder specialist as well, so I like to deploy a few strategies. But if you can't even hedge up at the desired price without moving it significantly, then you either have to lower your stakes and bet on a higher volume of markets or just take bigger risks. So it makes absolutely no sense for me to make racing a priority these days when I can make similar or more money in a shorter space of time for far less risk. And drone access is also easily and readily available now to the average punter. So the edge is almost gone since everyone's using it, as is the raw price data, where you can backtest strategies and find angles before the race even starts. There's almost exclusively just sharp money left. There's hardly any mug money left. So if you're trading almost exclusively against other sharp traders, the percentage of consistent winners is going to fall dramatically if you're just taking money off other profitable traders. And at this rate, I'd not be surprised if race trading completely peters out fully in the next 10 or so years. And that's going to be a sad day for racing. Anyway, as far as my performance since the last pod, or as of recently at least, I've been on a heater. So I'm on a really good run right now. I'm up on everything: racing, cricket, golf, boxing. Only one fight traded in the boxing, the Eubank Ben fight, and what a tear up. What a tear up that was. One for the ages. Of course, we backed Eubank. I did a detailed fight preview, which I released to my Substack members. So if you sign up, you can have a read through those. And we advised backing Eubank and for the fight to go the distance to win on points. So both trades were advised to members. We made some good money over there. But as far as the fight goes, I mean, boxing is a funny sport because fans care more about great fights than great performances. Because when a fighter beats the brakes off someone for 12 rounds, it's forgotten about. But ironically, two fighters that are not as good, that are inept defensively and can't get out the way of each other's punches, that's what sells. And it's why everyone remembers the likes of the Mickey Ward, Arturo Gatti trilogy and forget all the great performances that Floyd Mayweather put on, where he'd routinely make world-level opposition look average. When it comes to Ben and Eubank, they're probably borderline world-level fighters. They're relatively untested. But given that they're both very offensively minded and, of course, they got their last names, it all had the makings of a historic bout. And contractually, there's a rematch clause. Personally, I think it should remain as a one-off spectacle since it's not a real collision course. Both are at polar ends of their career. They campaign at completely different weight classes, and if you have to boil one of the fighters down and not even allow him to rehydrate just to make it competitive, then you have a problem. You know, if you remember, Eubank's legs buckled early in the fight. I think it was in the first or second round, and he was rushed to hospital due to dehydration. And both families, you would think, would know better than anyone about the dangers of such fight stipulations. And of course, I'm talking about the Gerald McClellan situation, Michael Watson and Nick Blackwell. But money talks, and it's looking likely that rematch is going to happen. But anyway, this has been as I was saying, this has been my best run in a while. It's been my best run since December, even better, in fact. And having been through the peaks and troughs of trading calendars when I'm going through hot patches and cold patches for many years now, I know well enough how important momentum is and how it's your friend. And when you get it, you want to milk it hard and for as long as possible. And that does not mean you should take more risk or bet on things that you shouldn't. Because in the past, if I had an outstanding week or two, I start to get lazy. I'd get arrogant, overconfident. I'd get sloppy with my risk management. I'd bet on markets that I shouldn't. I'd overstake. I'd take random breaks and try and pick up where I left off. And I'd start imagining and projecting all sorts of crazy figures if I continued this run. And inevitably, every run would eventually come to a grinding halt with a big loss. And I try and martingale my way back, only to end up back at scratch or even worse off than I started. So all that energy, all those wasted hours of good execution down the drain. And momentum works both ways, on good runs and bad runs. And unfortunately for me, the scar tissue of constantly fumbling the bag and blowing up a good run would always come back to haunt me. And those who've listened to this pod for a while now will remember what I did back in 2021 on crypto when I went on a potentially life-changing run in sports and crypto, where all my discipline went out the window because I started using leverage to amplify my profits, and it all came crashing and burning down. And that was the last straw for me. That episode is what prompted me to start journaling. And the last thing you want to do after losing everything is start writing your thoughts and feelings. But I was on my knees at that point, and it was do or die for me because I really wanted to make this work, and I saw the potential. I knew I was good. I just had really bad habits. And with time, just through honest introspection, I realized that, yes, obviously greed took over. But at its core, I just wasn't ready to get to the next level. There were lessons that I had missed along the way. I was still stuck in that self-sabotage loop where deep down I didn't feel comfortable with this new level of money. It was outside my comfort zone. I didn't know how to handle it. I was having record days week in, week out, and I was just never satisfied. The only thought in my mind was we can do more, we can do better. And all sorts of figures were going through my mind. I was entertaining all sorts of potentially extravagant purchases, and this false sense of confidence in my ability led to more and more riskless trading until it all came crashing and burning. And what I said to myself was, as I was journaling, I said, the next time I go on a run, and by this point my bankroll was decimated, so not in absolute terms, but in terms of ROI, I said to myself, the next time I go on a run like this, I'll be absolutely composed. I won't be phased. I'll continue to stick to the process. I'll continue to honor the schedule I set out for myself. I won't deviate from the plan. And I won't be overwhelmed with emotion. I'll just chalk it up to the tide just going in my favor. It's just a prolonged period of markets moving in my favor. And that humility is what was missing for a long time in my trading. And that's when I realized that when things are going well, it's not because I'm trading any better. It's not my doing. It's just that the conditions, whether that be a favorable schedule or just a good run, it's just a product of variance. And if I continue to stick to my tried and tested methodology, which I know works, I'm never going to give back my profits at the end of a good run or during a bad run. And guess what? Since then, I've never had a blow up since that year. Of course, there's been plenty of dry patches, individual bad losses, but never a blow up where I've decimated a significant portion of my bankroll. Everything now is controlled. And at face value, yes, I'm more disciplined at sticking to my process, but at its core, it was just a mental adjustment. It was a sense of feeling like you belong at that higher level. I kept saying to myself, how would I behave if I'd made it? How would I behave if I had 500k to £1 million in the bank? How would that trader be behaving? And just getting into that headspace and enacting that way now. So it was just about getting comfortable and being emotionally stable during those good runs. Whereas before, I was constantly chasing it. I was craving money. And the new me was at peace with what I made or didn't make, because I always knew that my process worked. I just trusted it. Plateaus only last because you haven't made that mental shift. You can have all the ability, but if you don't know how to handle success, then you will fumble opportunities all the time. And you're going to keep fumbling them and forever be doomed to mediocrity if you don't figure out what's going wrong. Now, I play a lot of golf. I know a lot of good amateurs and budding professionals, and it's widely accepted in golf when you become pro that if you don't make it as a touring pro in your first 3 years, you're never going to make it. One, it's too expensive and no financial backer is willing to take that gamble. And two, let's assume you do have tour level ability, but you're not winning enough on the satellite tours, or when you do win, you miss cuts when you get to the DP World Tour. What happens is that self-doubt creeps in and you become too familiar with competing against lesser competition to the extent that you feel out of place when playing at a higher level. So in essence, you keep yourself in that loop of mediocrity. In sports trading or crypto, any sort of trading is the same. If you don't make it early on, it's just not financially feasible for most, especially if you have bills and if you don't know how to handle that breakout and build off that momentum to catapult yourself to the next level. You're going to be trapped in that vicious cycle of mediocrity. And that's what happened to me, because I sort of made it early in the sense that I was profitable But because I had so many bad habits, my profitability was sort of stunted for the first 3 years. The only advantage I had on my side was time. So I could afford to figure things out because I started so young. But speaking of golf, I've been a victim of similar plateaus like I have in sports trading. When I was a junior, I was fearless. I would shoot under par scores often. And bear in mind, I was nowhere near as technically sound as I am today. And between now and then, I've become a lot more technically oriented. I've developed a powerful, consistent swing. I've ironed out most of the inconsistencies, but it hasn't reflected in my scoring. In fact, my scoring has gone somewhat backwards because I've become so obsessed with technical perfection. A lot of doubt and fear creeps in whenever I hover around par standing on the 14th tee. I'm almost waiting and expecting for that inevitable blow up. I'd say things to myself like, okay, if I bogey every hole from here, I'll shoot level handicap. It's sort of a surrender to what I believe is inevitable. And lo and behold, it would always happen. I think I'll have to start journaling around my golf, but I strongly suspect that it ties to my handicap, which has been stagnant for such a long time. When I got to college and exams took over, I stepped away from competition for the most part, and my progress sort of plateaued. And since my handicap hasn't moved much in such a long time, that number has become part of my identity, and I've allowed it to somewhat dictate my current reality. So it's kind of a curse when you attach your identity as a golfer to your handicap. And there's a lot of guys who only play general play. They post cards when they're playing with their mates, and then when it comes to competition, they bottle it or they avoid competition altogether because they become so attached to their handicap. I'm not that kind of person. I don't play general play rounds. I only play competition golf. So at least my handicap is an accurate reflection of where my skill level is at. But the only issue is because my handicap has been the same for such a long time, it's almost become a comfort zone somewhat. So whenever I step out of it and I play really well, mentally I'm always expecting something to go wrong, and it always happens. So that's something that I got to figure out. And the same way I journaled my way out of a plateau in trading, I think I'm going to have to do the same thing in golf. So I look forward to updating you guys on that. But with trading, as I said, I sort of journal my way out of it. But I think more importantly, like I said, I had youth on my side. I had time on my side. And that was one of the biggest unfair advantages that I had starting young with no financial responsibilities, because I would have been forced to give up a long time ago if I did. So I could only afford to be introspective and figure things out because I had time on my side. Everyone has unfair advantages of some sort, whether that be time, money, connections, physical talents. You have to figure out where the odds are in your favor, and that's what you have to attack. The point I'm essentially making is that momentum is a powerful thing, and when leveraged correctly, can leapfrog you to the next level. We all mess up several times, in fact, but only few people are wise enough to learn and get to that next level. Most people are stuck in that loop and never realize their potential because they allow the seeds of the past to dictate their future. I hope I've conveyed my points correctly. But yeah, there's a lot I want to talk about, and there's a lot to catch up on. It's been a couple of months, so I'm going to start putting out episodes again weekly. But yeah, for now, I'm going to see out this limbo period during this break in the cricket. Going to keep playing golf. I'm going to start journaling on my golf, like I said. Hopefully a few more barbecues in the meantime while the sun is out. And yeah, I'll keep you guys posted with regular updates as we go forward. So yeah, don't forget to subscribe, leave a comment, subscribe to my Substack. Remember, anymantrading.substack.com. I got a free newsletter and a paid Discord channel if you want to see my trades. We're on a hot run right now. On crypto too. I think the panic in the markets because of Trump's tariffs, the panic sell-off that happened in stocks and crypto was a good buying opportunity for us. So a few weeks ago, we managed to pick up a chunk of Ethereum at around £1,250. It's now hovering around 2,000. So almost a 60% return over there. And you only need to make a handful of trades on crypto and then just dump in Bitcoin or cash out, whatever you want to do. But like I said, we're winning on all fronts, sports and crypto, and I post all my trades in there if you want to take a look. I'll leave the link in the description below. But in the meantime, don't forget to share, sub, leave your comments and your thoughts, and I'll see you guys in the next episode. Thanks for listening.